TradingNut, episode 29.
So many traders focus on what to do and how much I should do, but very, very few traders focus on how to do it.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Hope your trading week's going well. This is Cam Hawkins from the TradingNut podcast. Now, sorry if my voice is a little croaky today. I've just finished a game of football, screaming my head off for 90 minutes. Season started today, so really enjoyable, but very cold. We went from 30 degrees to 11 degrees. That's centigrade over here in the space of one weekend. So winter is truly on our doorstep. Now, today we've got Shawn Lucas on the show. So, some of you will know Shawn very well. I actually didn't know Shawn at all, and I didn't really have a good chance to check him out before we set up the interview. I knew he had something to do with apiary fund, and that was about it. So you're going to hear some hilarity in the show where I discover who he is and actually what he does and how he does it. It's one of these shows where there are literally so many lessons for you traders out there, so many lessons. I was sort of going... Man, it's such a different show from every other show I've done. B, there are so many lessons in here, so many things that really hit home for me, and I'm sure they'll hit home for you guys as well. It's just one of those awesome interviews. And the best thing about it is that we managed to jump onto a video chat afterwards, and I've got a wee video. It's only a short one, but it once again reveals so much. It's on the YouTube channel as well, so after listening to this, head over there to the YouTube channel and definitely check out this video because it's simple but makes so much sense. Okay, right, one other thing before we get into the show. So one thing that's really hit home for me, and it's one of these things that I've noticed, I've known for a long time. So I've known that I really struggled with moving to higher time frames, right? I really struggled, massively struggled. I could not get I just was lazy. Didn't want to flick through the charts. Didn't want to have to try and remember what was going on the daily or the weekly, and then try and see what that means on the hourly. But in the last month, I've actually started doing it, and I'll tell you what. Oh my word, I can now see why this is what 90% of my guests talk about and say it's either multi time frame analysis or we're actually just trading on the higher time frames. I can't believe it's taking me this long, but I'm proud to say that over the last 4 weeks I've basically been using the higher time frames in multi time frame analysis every single day, and it's helped me so much more. In fact, one of the things I've done with one of the robots that I trade is I've actually added in the higher time frame analysis that I do to see to pick the direction that robot's going to trade, and it trades quite actively. I think I've mentioned it on the show before. I've been able to grow that robot account from where it started, so a fresh deposit, by 45% in the space of 3 weeks. Okay, well look, it was risking quite high compared to the deposit, but look, I haven't looked at all the details and the stats and stuff, but there weren't that many losing trades, okay? There weren't that many losing trades, and it was a little bit discretionary as well. So that's as part of the Robot Traders Club, which has got some changes coming up to it very soon. So guys, stay tuned for those changes that are coming up with the Robot Traders Club. I'm having to restructure things there. So you're going to find out about that in a future episode or on the email list. So if you're not on that list, go and jump on to tradingnut.com and get on it. Right. Before we get underway, I just want to let you know that I haven't given you an update on how my fasting's been going. So I did talk about giving this fast a go, and I've been pretty much doing it every single week. I've done it at least one day every single week. Oh, no, sorry, it's probably actually at least 2 days every single week. So I mentioned it. So, like, I'm actually getting up to probably an average of 3, maybe 4 days, or sometimes 4.5. I haven't quite done the 5 days in a row, but I tell you what, missing breakfast and lunch, and then just having a period of eating at dinner time, it just makes me feel so much better. Mental clarity as well. Like throughout the day, you actually feel a lot more, I suppose, aware of what's going on, and your brain's just not getting these sugar highs and lows where, you know, you're getting that sort of afternoon tiredness and all that sort of stuff. So, guys, if you do ever want to think about it or consider doing this intermittent fasting is what it's called, then I do recommend it. Okay, hit me up if you've got questions about it on the email, and I'll flick you a reply. Okay, guys, right, let's get on with this fascinating and fantastic interview with Shawn. All right, folks, we've got Shawn Lucas here from Apiary Fund on the show. Welcome to the show, Shawn.
Hey, Cam, thank you. Great to be here.
Well, look, it's great having you on the show, and look, I'm so glad you've been able to clear up for me just in the last 5 seconds how you say Apiary Fund. I've always called it an apiary fund, and even before that, I didn't even know what to call it. And I started Googling it and stuff. This was over a year and a half ago, and I was like, "Is it like the apiary, like birds, like an aviary?" Or I had no idea.
No, so many people get it confused. It's apiary, and it's actually a colony of beehives, and so.
That's right.
We use the beehive as sort of a model for managing our fund. So in a beehive, you've got, all of the bees that run out, they find nectar, they bring that nectar back into the hive, and the hive then supports the bees through, the dry season, and the bees sort of support the hive. And so that's kind of that's the model that we've built our fund around is, I've got a bunch of traders scattered throughout the world. They find different opportunities in the market. They make a little bit of money. That money comes back into the fund. And then, of course, they get a share of the profits that they make. So
yeah,
it's kind of a neat analogy,
Yeah, brilliant. Well, look, I mean, one of my listeners recommended I get you on the show, said you're one of the head traders over there, and basically was very impressed with what you do. So I want to get your full story today and help the guys that are listening to get a view of not just you, but something that can help them as well. So do you want to start off by giving us your background? How did you get started into trading and your journey to where you are now?
Yeah, well, getting into trading, that takes us back a few years. I was just fresh out of high school and had an opportunity to head over to Europe and spend a few years over there in Hungary. And this was back during the early 90s. So the whole Russian socialist bloc kind of crumbled away. And I was there during that time period. And that Hungary was suffering from a period of, hyperinflation. So, everybody was concerned about, inflation rates and currency conversion and, how are they going to pay for how are they going to pay the butcher, the baker, the candlestick maker? So, I was lucky during the time because, my money was coming in from the United States. And so, I always got a pretty good conversion rate. But I'll never forget, walking down the street one day, and there was a nice Mercedes-Benz parked outside the bank. And as I got a little closer to the Mercedes-Benz, I noticed there's a fellow inside there, and now I'm starting to get a little suspect and get a little closer, and all of a sudden the window rolls down and this head pops out, and he's like, "Hey, Amerikai, Jareida," which means like, come here. He starts pointing at me, and he's like, dollar. And I was like, oh man, I'm getting robbed outside the bank. So anyway, I pulled out my dollars and handed it to him. And, that's the moment where things go from bad to worse. He like reaches over into the glove compartment, and I'm thinking, oh no, there's nothing good in a glove compartment. And anyway, he brought out just this nice big wad of Hungarian cash and handed it to me, and he's like, anytime you need to change your dollars, come visit me. So for a young kid in a foreign country, he handed me this wad of cash, and I'm like, oh my gosh, this is so great. The bank was only giving like half that much. And it just opened my eyes to this whole new world of like currency exchange and what happens, what moves currencies. Before that, I had never even considered the idea that currencies had anything other than what the stated value was, And so anyway, that had got me started down a course of, studying and, got a degree in economics and, spent my time with Charles Schwab back in the 90s, which was a fantastic place to kind of grow up in this industry. So yeah, that's kind of what got me into it.
And when you were at Charles Schwab, I mean, was that working on the trading floor there, or with traders, or just at the bank, just doing banky stuff?
Yeah, primarily, in the beginning, it was just working on the trading floor. So you'd get the calls to buy or sell so many shares of XYZ company, and you'd plug those trades into the system and send them off. So nothing real big, nothing real important, but you get a real sense of what's happening when you're working the desk like that. So,
and how did your sort of journey go from there to your education? I mean, what did you look to? I suppose what did you look to get educated on? Because there is so much you can pick and choose from. And then what did you land on, and who did you use?
Yeah, no, it's an interesting journey. Back in the 90s, investing, really the concept of trading really hadn't really crossed my mind at that point. But investing was, and all you really had to do back in the 90s was find a good popular stock and put your money in it and let it run, and so that's how I kind of got started building my own assets. And pretty soon your friends, family start asking you questions, and how are you doing this, how are you doing that, and I got to the point where I was really just I was being asked to come and talk here and speak there and share my thoughts on this and that, and it just kind of evolved into this point where, pretty soon I was like, you know what, I think I'll head out of the retail brokerage industry and move more into money management. So about, early 2000s, I started doing some money management, and right about that same time, the currency market started taking root in the industry. And so I was right there, right involved in that, those early days, early technical analysis, internet's just really starting to open up the doors on everything. And so, I started focusing back on the currency market back then. So.
And moving from your investing sort of approach to in stocks to currencies, I mean, how did that transition? I mean, did you have to reskill on everything? Because I've had guys on the show before that have literally had to sort of start again, and it's taken them sort of like another 4 years or 3 years or 2 years to get to the point where they were consistent going from the stock market to the Forex market.
I didn't really have that much of a difficulty making that transition. I think a lot of the style that I used in investing, where, you'd, in my career, it was never a one trade type setup. It was always, building a position and working around the position. So, as the market's moving in my favor, maybe I'm taking a little bit of a position off, and then as it pulls back into cheaper prices, and as long as all the fundamentals were still good, I'd be picking up a little bit, and I'd just be constantly moving and adding and taking away around a core position. And I took that same style and that same philosophy to the currencies market, and it's actually been, it's done brilliant. It's been great. The only real adaptation that I've had to to really focus on is, I've kind of adjusted from more of a longer term, holding it over a period of weeks and months, to now, I'm almost in and out within the same day. So it's like, so that time frame was really the only adapting that I've really had to make.
Oh, cool. And so what were the main things that got you that sort of original position where that you're working on? So were you using traditional technical analysis or something a bit different, or something people hadn't found out before?
A lot of it started out in core technical analysis. So I remember, back in the 90s, going around and sharing ideas on technical analysis. I got my CMT designation, so did all the requirements to get into technical analysis and as a profession, or as a professional designation, and back in the early days, it was just, I'd read every book that I possibly could read and studied every possible technical analysis, any material that I could possibly get my hands on. And it almost seems like I went clear out to the edge of what, like the most obscure topics in technical analysis, like lunar cycles or whatever. Yeah. You're like, wait, what am I doing clear out here? And then you realize, there's this day where you realize that, what, it just all really boils down to, simple price action, and, boil it back down to the core. There's only two things the market can really, three, I guess. You can only go up or down or sideways. And, how do you read that, And so pretty soon, you know, all the technical analysis kind of went out the window, and I just started focusing in on reading price action. You know, where's the market most likely going to reverse? Where's it most likely going to consolidate? You know, if you look at how price develops, you know, trending markets are really kind of, they're kind of rare if you really think about it. You know, most of the trend in a daily trend comes within, you know, 3, 4, 5 bars in the currency market. So, you know, I really started focusing in on these non-trending periods of the market, and you know, how do I make money during those periods? You know, because that constitutes 70-80% of the time, or of the price action time, and how do I make money in those times? You know, it's kind of hard to pick up the 3 or 4 breakout bars in a day. But man, I've got all of this time where the market's just kind of moving sideways and floating in between support resistance levels, and how do I focus in on making money during those types of periods?
Yeah, it is one interesting, isn't it? And I've never really thought of it like that. So that's quite a new one. But you're right. You're so right. It is like 3 or 4 bars that are the bars that move, and then that's your trend. The rest of it is just chop in Asia, or smaller trends within the day. So okay, cool. Well, look, let's dive into some of the detail around. Oh, and actually, before we do, I want to find out how you got into the apiary fund as a trader there. How did that work?
I actually started the apiary fund, so I'm the founder of the apiary fund. So, moving money, you know, making money in the currency market is really kind of at some point throughout your career, you get to the point where it just starts to get easy, right? And, you know, you'll start to build your account, and then you'll get that beautiful inflection point where you're starting to like compound your returns, and you're starting to see your account sizes grow to levels that you're just, you know, you couldn't even fathom, you know, at some point in your life. And so, you know, I started getting to a point where it was a little bit difficult to move my money around the market. You know, I was just, for the most part, you know, the vast majority of my account was sitting there idle. And, you know, I started thinking, man, I wish I could do something, you know, and I was kind of past the whole stock investing stuff, so I didn't really like to get back into that. But I had an opportunity. I was called to be an expert witness in a lawsuit. And my job was to analyze the trading performances of this trading floor. So what I would do is I'd go in and I'd look through all the trade records, and I would match those to the charts, and I would my job was to give testimony on what kind of system this firm was using to place trades. They were getting sued by another firm. And when this was it was a Chinese firm, and so I had a chance to fly out to China and spend several weeks on this trading floor, and I was really fascinated with what I saw, because what this Chinese firm was doing is they were bringing in U.S. traders, trade firms, system people, like I've got this algorithmic trading or this trading strategy, and they would come over to this Chinese firm and they would teach the Chinese how to do it. They would bring in like all of these young Chinese traders that really didn't even know what the stock market or the currency market was. And they would teach these traders how to trade those systems. And so they were trading like 20 different systems at this firm. Anyway, I was really kind of impressed with the model, that they were using. They were, basically bringing in all these traders, teaching them, showing them how it all worked, and giving them a chance to trade on their floor. So they'd train a group of, say, 50 traders, just young Chinese guys going to school or whatever. And, at the end of a 3-month period, in a 6-month period, they would whittle that down to just a core group of like 4 or 5 traders that would stick around, and their job was to trade that system. They didn't care about them trading any other system, just that simple system. So that just really kind of, rested on my mind. Here I've got an account that's just, for the most part, 70-80% of my account is just sitting there dormant most of the time. What if I were to go out and show people what I do and show them how to make money in the currency market? Then I could give them a little portion of my account, they could trade it, and we'd split the profits. And that's kind of the backstory to the whole apiary fund concept. It's nothing new. The whole idea of a proprietary trading floor has been around for years and years, but this was a little different in that, we were really focusing in on, non-industry people, non-industry traders. So.
Cool. Well, so that's I should have actually done my background research and found out that you were the founder of the apiary fund. I do actually. I mean, I've heard that doing good podcasts, go and research your guest and find out as much as you can. But I just tend to prefer it the other way, where I just get the guest on. I have no idea who they are and find out everything, because I'm sure there's other people out there who've got no idea who you are and what you do. So I'm sorry about probably even labeling you as head trader at the apiary fund, and in fact you're the founder.
Oh no, that's the title I prefer.
Oh, good. Well, look, let's dive into some of the detail here around your trading style at the moment. You talked about intraday. You talked about you moved from high time frames to more lower time frame intraday stuff. Do you want to give us some stats around that? How long you hold trades for typically? What are your winning percentages? Where would you hold a stop loss? Number of trades you're managing, currency pairs. There's a whole bunch of things I'll pull you up on if you miss any out. So yeah, just have a buzz.
You bet. I'd be happy to go into it. So looking back, it was probably 2004, 2005 timeframe. I was working with a brilliant programmer, a guy that was able to get in and start to analyze market data at unreal levels. By today's standard, probably not so unreal, but back then it was really, really fantastic information that he was digging into. And we kind of, you know the concept of the ATR, right?
Yeah.
The ATR gives you this, this idea of what the candle size, the magnitude of each candle ought to be. Well, we started looking at an ATR only in the cycles of the market, so the distances between pivot points. So the market pivots into an upward cycle or an upward leg of a cycle, then it pivots into a downward leg of a cycle. And so I started doing, these calculations off of these cycles in the market, and the price cycle, we call it the price cycle or the time cycle. How far does it typically move, and how long does it take to move in an up leg of a cycle and in the down leg of a cycle? And so I realized, after starting to study that almost all of my trades were mismatched in my expectation. So what that means is, I might be trading in a market with an 8 pip cycle, an 8 pip up, whatever down, but I'm trading the long side of it and it's got an 8 pip cycle. Well, I may be pushing for a 9 pip or a 10 pip gain or a 12 pip gain or something like that. And so you can see that my target was mismatched from what the reality of the market would be able to give me. Now, occasionally it would go that extra little bit and get you targeted out, which was great. That was just enough to keep you in the game, right? But not enough to be real consistent. And so back in 2004, 2005, I started readjusting a little bit about how I trade. And I set a rule in my trading that I would only target 1/3 of that price cycle. And so whatever my price cycle calculation was, I'd only shoot for 1/3 of that. And it really dropped, my average income on a trade down.
Yeah.
But it just skyrocketed my performance. Like my success rate just went through the roof in doing that. So, but that simple adjustment turned the corner in my trading and allowed me to start really getting super consistent in how I trade. So that's really one of the core tenets that I've based a lot of my trading on. If you're not consistent, or if you're not in line with what the market is willing to give you, then ultimately you'll fail as a trader every time, over the long run. But as long as you're matching, as long as you're in sync with both the time it takes the market to give you and the magnitude of the move the market's going to give you, then you're very well balanced, and you can perform some really great things in the market. Does that make sense?
Yeah, that makes perfect sense. Yeah, look, I can sort of relate it back to me and the past week, where I got everything else right apart from holding on to it for too long, and it never reached where I thought it was going to go. And that happened a few times, whereas the week before was completely different. So I know exactly what you mean. And my question is, do you still use 1/3, or have you changed that parameter over times?
No, I still use that rule. That's been a rule that's been consistent for the last, almost ever since about 2005. And then also the whole idea of the time cycle is important too, because it's not so much, and every trader experiences this, where you go through, you get into a trade and you've got the expectation, but very, very rarely do we look at, it should happen in this time frame. And that's an important consideration, because a lot of traders will get into a trade and they'll be holding that through 1 cycle, 2 cycles, 3 cycles, 4 cycles, and eventually the market comes back and hits their targets and they give themselves a pat on the back, But meanwhile, they've missed out on, 6 cycles of the market for income. And that's a problem. that I see a lot of new traders, especially, they tend to get in, they've got a good setup, but then they hold it through the entire cycle, and then the market moves against them, and then they've got another cycle, and so forth until that market comes back and finally hits their targets,
or hits their stop if they
stop. Yeah.
If they move to break even, and it's like which is what happened to me, and it happens like now and again. That is one of the things that sort of trips me up. But I really do appreciate what you've just said there, because I think that for me is a key bit of information that I need to really sort of start thinking about how I implement that to what I'm doing now. Now, so do you want to give us the sort of number of positions that you'd be holding at any one time during the week?
So positions this is another way that this is another area that I look at the market differently than a lot of different traders. So let's say you have a setup or a strategy, and that strategy says that if this happens in the market, then you do this, right? A strategy is really designed to tell you what to do in the market. And part of that strategy ought to be designed to tell you how much risk to take in that market or in that setup, right? So a good strategy will tell you both what to do and how much. There's a concept that is not talked about in the industry, and that's called technique. And I'm really big on this because, a strategy, so many traders focus on what to do and how much I should do, but very, very few traders focus on how to do it. And so I'll use strategies, any number of strategies in my trading session that will tell me when to do something and how much I should put in the trade, based on risk and all of the parameters of that strategy. But that's where I end, and my technique starts to take over. And it's a completely ridiculous term that I use here, but it's called wobbling. And what I'll do is I'll take that core position that I should be allocating to this strategy, and I'll divide it into just tiny, tiny pieces. And I'll start to throw those trades in around that position. So this is going back to my old investing days where I trade around a core position. So my strategy will say buy, let's say 10 lots of euro. And instead of buying 10 lots right there on the spot, what I'll do is I'll start to layer in, because very rarely do I ever get the first trade right. Does that make sense?
Yeah.
Do you feel me there?
Yeah.
I know a lot of people feel that way, that they're like, oh man, they get into the trade and they're like, oh man, I could have done better.
Yeah, exactly.
Placed that trade better.
Actually, I had a guy on the show a few weeks ago who had, he called them bullets. He would have like a number of different bullets for one particular trade. And it's just a name for a trade, right? As a bullet. It's like, I might have 6 bullets on, and they're all sort of positions scattered around that particular entry point, and some of them are in better than others. If it goes against them, then he's got higher, and then if it all goes completely pear-shaped, then he had some sort of funny way that he would try and rectify it by hedging and all that sort of stuff. But sorry, carry on. So wobbling.
So similar concept, it'll, instead of bullets, I call them layers. So you're building in. So in a traditional setup, say a 3-bar reversal pattern or some kind of a reversal pattern. If you look at that pattern on one time frame, and then you go to a different time frame, you're going to see that pattern differently. And your trigger points on different time frames for a similar pattern will be different on those different time frames. Even on you may get the reversal signal on a 100-tick chart before you get it on a 5-minute chart. You may get it on and so what I'll do is I'll start to layer in to these trades at these different trigger points on different time frames. And so what that's doing is it's basically, I'll start out into it small, build a position. If the market makes moves, I'll start to take layers off And then as it pulls back, I'll add layers on. And so all the while I'm kind of scalping in and out of the market while all the while that initial setup is starting to form on whatever time frame chart I'm getting the signal on. Does that make sense?
Yeah. Yes, it does. It does. Okay, so say for example if the setup's on the daily chart and you've got your main sort of position there and you're just taking minor positions on lower time frames and you're taking off profits when you get profits, and adding more and taking off positions until it makes that sort of, I suppose, thrust in the right direction, and in which case then you're now looking at the next cycle.
Yeah, and then hopefully you're catching that 3 to 4 bar, that 3 to 4 bar trend move that you're looking for.
Yeah.
So oftentimes, I'll find that I'll make more money in the build up to that breakout,
right,
than I do during the breakout.
Right.
So you just scalp them in and out, taking profits, and sometimes, readjusting position, but all through that build up phase. And then when that thing triggers, then that's where, the gravy train is, and that's where, you get one of those a day and you're like, oh, I'm good.
Yeah.
don't need to do much more than this.
It's funny because I have actually been doing that in the last couple of weeks. It was something I thought about trying after another listener recommended it to me. He said, why don't you do this? Whereby actually I've got a robot that it's a bit of a machine gun sort of in terms of it placing trades. But and so if you just let it run on its own, it doesn't necessarily. I mean, it's got quite a big profit target, and it sometimes will go to that profit target. But then it might set up. It might sort of trigger off. Say it could trigger off 5 or 10 positions around about the same level, which would be the entry point. And then if your account's not big enough or it all goes against you, you tank. But what I've been doing in the last couple of weeks is sort of picking a direction and going, okay, well, the direction is a sell. If I can see that, I'll have to manually go in and work that out myself. But then and I've limited the number of positions it can take. So, actually not the number, but I've limited where they sort of lie. I've said I want I think I said this week it was three pips between each position. So at least if it's going to give you a second entry, it's not going to be the same level as the current one. It's going to be at least 3 pips either side of it. So that's sort of your layering. And then what I do is I get an alert when the trade triggers, and then I'll go and check it an hour later, see where we're at. And then if we've got some profit, I'll take some off. I might even take some ones that are just at break even off if there are ones that are running into good profit. And it's working. I mean, the first week I did 20%. The second week I did about 15%. So it's I'm glad that you've said that because it does ring bells with me.
No, that's exactly the concept. Yeah, that's exactly the concept. So
cool. Rightio, look, I know we're going to run out of time in this interview because this stuff is brilliant, and we're already halfway through. So
time flies.
Yeah, exactly. So, can you just give me a quick list of the instruments that you trade or you focus on?
Yeah, again, I think I'm probably different than a lot of the traders that you interview because I've come to the point where 98% of my trades are done all on the Euro USD. So I don't even scan through the rest of the markets anymore. Most of my focus you get good at one thing and why change that up? Why try and figure out the price cycles on another pair when you're in tune, you're in rhythm with the Euro. So very rarely will I trade outside that Euro USD currency pair, and then but of course I'll be looking at all the time frames on that and making sure that I know where all those trigger points are and building into those positions.
Cool.
So,
well, it's easy one thing. Right. So what about your typical trading day? What does that look like?
and again, I'm probably different than most, but I'll trade my personal account. I'll just wake up, market. All your news events come out about 6:30 a.m. my time. So, I'm waking up about 5:30, just kind of 5:30 a.m. looking at the markets. Maybe building a few positions prior to those news events. Those news events fire off, and typically give a good, couple of those good breakout opportunities, and usually done by about 7:30 in the morning, and then I roll into the office and trade with our traders after that. So.
Cool. Well, so if there was one thing you'd recommend, if you had to recommend three things on a price chart, what would you recommend somebody goes away and starts educating themselves on?
Well, again, for me, it was this understanding of getting into a rhythm of the market. Like I was saying earlier, most of your price move happens within 2 to 3 bars on a 2 to 3 bars on a 5-minute chart. Maybe a little bit more than that. So the rest of the time, you're really kind of stuck in this just nice, easy flow, where the markets will maybe get into a trending, up one cycle, down half a cycle, up 2 cycles, down 1 cycle. But regardless, it's always moving up and down. And if you can get a feel for what those price cycles are in the movement, you'd be amazed. I mean, you go back and you draw a bunch of lines from pivot low to pivot high. You take all those lines and you put them, you stack them up all next to each other. So you've got, maybe 20 different lines all stacked up, and you'll literally be able to see the price cycle based on those lines between your pivot lows and your pivot highs. And as long as you're tuning yourself to those price cycles, you've put yourself in what I call the realm of possibility. If you're expecting anything more than that, you're outside the realm of possibility. You may get it, you may not get it. But as long as you're tuned to those price cycles, things will generally work out for you in the long run. So that's the first thing, is really understanding, getting a feel for what the market is willing to give you. The second thing, I think, is understanding this concept of the market moves in phases. It's almost like an A-B pattern, where it moves from an expansionary phase to a consolidation phase. And a lot of new traders, especially, they'll see the expansionary phase, get all excited, jump into the trade, in the latter end of an expansionary phase, and meanwhile the market's preparing to move into consolidation. And what I've tried to do is do a phase shift in my trading, so that rather than getting into the market during the expansionary phases, or even when that expansionary phase triggers, what I try to do is get into the market during the consolidation phase. So the part nobody loves in the market, that's where I'm starting to build my positions. When everybody else is like, this is the worst market ever, I hate it when it does this. I'm like getting excited, because I know that if I can build the right position during this phase, that there's an expansion phase that is coming up next. Maybe I have to wait 5 minutes, maybe I have to wait 15 minutes, maybe an hour, whatever it is. But I know that expansionary phase is coming. And I know if I prepare now, that I'll be able to catch that, for the most part, that expansionary phase. So realizing that, that when to be in and when not to be in, and following the crowd, puts you in at the end of the expansions, which is just the wrong time.
Yeah, and it's so true. It's so true. And I'm actually going to take heed of that as well, because it's more good advice that I need to listen to more often. And did you have a third thing? So phases, cycles?
No.
If you don't, it doesn't matter, because these two are brilliant. I think there's enough for anyone to sort of get their teeth into. Just quickly, before we move into the quickfire round, I want to get your view on cryptocurrency trading. Bitcoin, where do you think it's going to go? Have you traded cryptos before? What are your thoughts?
Yeah, I've definitely looked at them, definitely starting to build positions in them. Because I don't have a real good sense of the market structure in the cryptocurrency world. So you think of it like this. If you've got, in the currencies market, you've got an enormous amount of people trading it, right? A lot of decision makers. And so you can kind of have some assurance in the law of large numbers. The masses will tend to perform a certain way. In the crypto world, we don't have that mass quantity of traders yet. And so a lot of the patterns that we see that are forming are a little erratic at this phase. And so, getting a real solid, consistent performance out of the crypto market is developing. It's in its early development stages. And so when I don't have that good sense of what is the price and time cycles of the market that I'm trading, then I tend to scale out. And so right now what I'm doing in the crypto market is just building longer term positions, taking an opportunity to take off a little bit as the market's moving in my favor, add to those positions as the market is pulling back. And the more that I do that over the coming years, as more and more participants file into this market, I think that the market's going to get a little bit better and better and better with time, like a good wine.
Yeah. And so what's your preferred symbol? What are you trading, Bitcoin or Ripple, etc.?
Yeah, Bitcoin primarily. Again, I tend to focus on the markets with the biggest participants. So.
And do you have any view on like what might be that price where it starts to rise again at this current point in time?
Well, clearly right now we've set up, on the longer term charts on crypto on the Bitcoin, we're in that sideways consolidation phase. And so, you're going to get a breakout, at some point in the near future. When I say near future, it could be 6 months, it could be, 1 month, it could be whenever. But, we have been stuck in this sideways range for, several months now. It's a $1,000 range basically. And so, I've been taking profits inside that range, all the while I'm building up this position. Now, if it breaks to the downside, I'm caught in a long position. I may liquidate that and then start to build in on the next consolidation phase. Or, if it breaks to the upside, then I may max out my position size in this and take advantage of the expansionary phase. So, but regardless, that's what I'm looking for, is the next breakout of that from this consolidation range.
Cool. Rightio, well, let's get into this quickfire round and find out the little details around what it takes to become successful. So how long did it take you to go from newbie to consistently profitable?
Oh, the better part of my career. I think it's I think everybody goes through phases there where you're trading really good and then you're like, what am I doing here? But I remember the first several years of my life, of my trading career, it was give or take that way. But definitely, there's a threshold, an inflection point that I crossed, probably around that 2004, 2005 mark, where trading just became easy.
Right.
It just became easy. And that was probably, my career started back in 96. So that's roughly 10 years, 8 years, 9 years.
It's about average. What's your mental approach to trading, and do you have any special techniques you can share with us?
My mental approach is just keep it chill. I've got an Instagram page or a hashtag that I post. I'll trade anywhere and everywhere as long as I can get a cell phone connection or a data connection. I'll be trading at my daughter's soccer games. I'll be trading out on the fishing boat. I'll be trading anywhere and everywhere. just because, I don't want trading to become a job. I just want it to be fun, and I want to be able to make money. So I've got this picture on there where I am my wife drug me to this Broadway play. I hate Broadway plays. My wife drugged me to this Broadway play. I pulled out my laptop and I'm sitting there trading Broadway play. And everyone's just
a laptop. Oh no. Cool.
I'm having
Okay. What's your favorite entry setup?
Favorite setup is probably the breakout of the consolidation. So some sort of a breakout of a consolidation phase. I live for that trade. And then the follow-up to that is like the first retracement of that breakout. I love, love, love that first retracement. So you get the breakout, it pulls back, and then I'm loading back in. So.
What strategies do you use to exit or manage active trades?
Go back to that price cycle concept. Everything is, if you looked at you could set a Swiss clock into the take profits on my account because they're all exactly the same, within a few fractions of a pip. So it's all based on that price cycle. Whatever that price cycle is, 1/3 of that.
What's your recommended trading book?
Oh, it's been so long since I've read a trading book.
Does anyone read books anymore?
I have not I got to be honest, I haven't for years.
Okay, you don't have to answer that one. If there was one thing you'd recommend any retail trader spend the next month mastering, what would it be, why, and how could they go about mastering it? Probably the best use of their time is starting to recognize that consolidation and expansion cycle. It's there. Sometimes it's big, sometimes it's small, but if you can really grasp that concept. I know it's basic. I know it's so basic, but sometimes the most basic things are the things most overlooked. But really focusing in on when is the market in that consolidation phase and when is it in that expansion phase? The expansion phase has happened the opportunities in the expansion phases are so rare. Most of the time it's in that consolidation. And so being there at the right place, at the right time is so key. What's your preferred broker and trading platform?
Brokers, I think I use Interactive Brokers for most of my personal trades. Of course, I've got my own trading platform that we use at the Apiary Fund, but that's all proprietary, not retail.
What's the worst trade you've ever had?
The most was back in the 90s, when I thought I was a great trader because everything was going up. And then the market turned and I lost, I'll never forget. I just lost the entire account, got a margin call, had to go home, tell my wife. That was brutal.
If you could leave our listeners with one piece of advice, what would it be?
Oh, just keep at it. Oh man, there is nothing better in this world than learning this art, this skill. It's so liberating. You can do a lot of things in life, a lot of good things in life, build your career, do whatever, but focus, spend some time learning how to make this work because it's freedom. It's what gives you the opportunity to do the things that you really enjoy in life, not just it gives you a chance to really pursue your passions and the things you enjoy. So,
nice. Right.
Just learn it. Stick at it.
Stick at it, guys.
Just keep focusing on it.
So last question of the show is that we'd like you to give us the bones of a full trading strategy, entry setup, stop loss, take profit targets, market time frame, basically something our listeners can have a bit of a play with at home this week. What have you got for us there?
I think probably the consolidation breakout trade is probably, let's say you're looking at a 1 minute chart. I always trade with two charts. So I got a 5 minute and a 1 minute. the market, let's say the market has moved in an entire price cycle on the 5-minute chart, meaning it's moved from a pivot low. You're expecting a pivot high to come in. And then what you see on the 1-minute chart is the exhaustion play, that last gas move. And then the market kind of moves into a consolidation where you've got the apex bar on the 1-minute chart. You've got several bars, inside bars off that apex bar. That's golden. So, basically you put your chart, your triggers around that apex bar, looking for a reversal or looking for a continuation trade, whatever your price structure is on the 5-minute chart. Once the market crosses through that trigger bar, you should get into trades, and then you look for that 1/3 of your price cycle as your target. I know it sounds really simple, but there's a lot that goes into really becoming an expert in how to capture those type of moves. But that's the bread and butter right there.
Superb. Well, I drew that up on my pad here, and I understand what you're saying. I can see it. Maybe we can just get on a quick video call after this and show the guys what it looks like. Now, last question before we wrap up. What's the best way for the guys to get hold of you?
Oh, just go to either traderonthestreet.com or apiaryfund.com and just send us an email, or you can check out our Facebook page, apiaryfund.com, Apiary Fund Facebook. Get a hold of us through there. Those are probably the best ways.
Superb. Well, look, a big thank you to Shawn for sharing with us today. Everything we've discussed here, along with all the links, are in the show notes. To find them, simply search for Shawn, and it's SHAWN. Yeah, on the search in the search box on TradingNut.com. Until next time, I wish all my listeners trading happiness and success. So there you have it, guys. Shawn Lucas interview done. What a fantastic interview it was. Now, look, we've got some mandatory viewing, and I'm saying this is mandatory. If you don't go and do this, you are missing out. So if you're on your phone, if you're listening to this driving or commuting or whatever you're doing, then what's the best way to do it? Look, I'll put a link to the YouTube channel in the show notes. There'll be a link to his show notes page in the show notes as well, the description. So what you need to do is just click on that, head over to TradingNut.com or head over to the YouTube channel and check out the video he did after the show. It really does put everything that we talked about into perspective, and you'll be blown away. You'll be blown away how simple what he's come up with is, and how you guys could actually replicate it as well. It's as simple as that. Right, whilst you're there, do subscribe to that YouTube channel and do leave a review. Not on the YouTube channel, because I don't really do reviews, but leave a review on the podcast app that you're on. I really would like to see a few more reviews coming in. I know that I hardly ever ask, and I should ask more, but please, guys, if you send me a good review, I'll read it out on the show, and if you've got a bad review, then, well, look, leave it anyway. I just want to hear what I need to change and what I need to do differently. So, guys, last couple of things. One, higher time frames. Please, this is the lesson that I've taken, and this seems to be working. Remember that. And my football match today, we're 3-1 down at half-time. What did we end up? We actually won the game 5-3. How did that happen? I've got no idea. I played very little part in it by missing 3 golden opportunities to score a goal. Right, guys, we've got the next episode coming up soon, and it is a doozy, so you're going to want to subscribe to the podcast. If you're not subscribed, you don't want to miss this one. Trust me. All right, folks, until next time, catch you later.